More numbers came in Friday that show how the US economy slowed down last month. Consumers hit the brakes while goods imports plummeted by a record as companies adjust to higher tariffs. Inflation-adjusted personal spending rose just 0.1% after rising 0.7% a month prior. Separate data showed 20% slump in imports, marking a new record plunge. That led to a massive narrowing in the US goods trade deficit in April. But the margin is small and not much of a surprise in these volatile and uncertain times. Meanwhile, the Federal Reserve's preferred price gauge remained tame. The Personal Consumption Expenditure Price Index, excluding food and energy, increased 0.1% from a month prior. Compared with the year prior, the so-called core inflation gauge rose 2.5% from April 2024, and that's the smallest annual advance in more than 4 years. So in that respect, the widely predicted spike in inflation tied to President Trump's trade war, it's yet to manifest in the data anyway. However, demand is weakening as consumers cut back on spending in a big way and companies have slowed imports. Volatility gripped stocks in the last stretch of the month, with the market bouncing from its lows. Wall Street's macro traders are getting schooled in Trump-era turbulence, with mixed economic data adding to their woes. While the S&P 500 whipsawed this month, the index marked its best May since 1990, gaining more than 6%. Shorter-term bonds outperformed Friday, though Treasuries saw their first monthly drop this year. The dollar barely budged while posting a fifth straight month of declines, the longest slide since 2020. For latest news, download the WION app and subscribe to our YouTube channel.